Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day to start things off. Clients of BlockFi, a cryptocurrency lending company, will now be able to start earning interest on any amount of Bitcoin, Ether, and Gust, which is the Gemini dollar. On the 13th of September, the New York-based cryptocurrency lending company known as BlockFi announced that starting today, then, its BlockFi interest account, or its BIA clients, will not be required to meet a minimum deposit amount in order for them to earn interest on their Bitcoin, Ether, or Gemini US dollar. Zach Prince, founder and CEO at BlockFi, stated that he is excited to see growth in the platform activity from crypto investors leveraging their wealth management products. While the BlockFi team added that the decision to waive the minimum deposit will make its BIA available to a wider crypto audience. This year, the Latin American cryptocurrency lender expanded its services into India and now plans to enter Latin America. Co-founder and vice president of operations, Flory Martinez, said, and I do quote, "Earlier this year, we expanded into new markets such as India. By making BIA open to all, we plan to target clients in Latin America where banking services and credit reporting are limited. US-grade financial products have been typically only available to high net worth individuals in countries like Argentina and Costa Rica. BlockFi's platform leverages blockchain rails to make wealth management products available on a much broader scale," end quote. First, this is not paid advertisement. I do not do that on this channel. Secondly, what's important to note is, for those of you who may not have been paying attention or just finally starting to get it, and I'll give you I'll go from 2018 to now. In 2018, as the cryptocurrency prices of the wider market were going down, the idea behind a lot of this was that we needed traditional financial products to be able to move into the cryptocurrency space. One of the easiest ways to do this was to have people be able to earn interest on their cryptocurrency that they had deposited in different platforms. Cool. The second part is that nearly every single time that one of these things was offered, it was only offered to high net worth individuals, not even in Argentina or Costa Rica. It was just in general, if you had a lot of money, you could deposit your stuff with them and therefore you could make extra money. Part of the problem is that in 2018, for those of you who were here, for those of you who were not here, I'm sure you remember or do not remember at all, the idea is that the people, my opinion, this is how I see it and how it actually was, is that the people who built the cryptocurrency industry, the people who got Bitcoin up to $20,000, were no longer important. And the only people who were important were the institutional investors who had millions and millions of dollars, potentially billions, if not trillions, yes, that was also thrown around, who had money to sprinkle on top of the cryptocurrency market, which would cause the prices to go up, and everything was just focused on institutional investors. You may remember, because I do, Coinbase had a number of things, I believe 3 things that they launched were exclusively for institutional investors, pretty much meaning, I think if you had a deposit of over $500,000, you had a deposit of over $1 million, and I think in some cases it was $5 million, you could earn interest, you could do this, you could join this platform, you could do so and so and so and so. 2 of these 3 things disappeared, which we also spoke about at the beginning of this year. Why? Because the institutional interest that they thought was going to come into the market did not appear. The people who did appear at their doors were the same exact people who had been in the cryptocurrency space for a number of years, who may not have been millionaires, but who still in their own way caused the cryptocurrency market to move. So this is not me talking down to or about BlockFi. It's more so that this is why they, in my opinion, I haven't been in the room with them, so I don't know the exact extent of this, why it appears that they've changed their no minimum deposit to earn interest. Because just like Coinbase, just like Binance, just like Gemini, who also just launched this, they've all tried to make sure, or usually what ends up happening is that they say it's only for institutional investors. They get a couple of $1 million and they realize that it's not enough, and then they start opening their doors to everyday normal people who also have tons of cryptocurrency, and they keep on, I don't know. I have felt for a very long time that when things are launched, they tend to try to just target very rich people, not realizing that if you even keep into account that there are normal people out there who have half a Bitcoin, maybe 6, 7, 8 Bitcoin, that still adds up if you allow millions, if not billions of people around the world to join your product. So I like that this is happening. This is not me saying that this is a negative thing. Every single major cryptocurrency company is doing this exact same thing. These are going to become the new bank accounts, whether you knew that or not. I do like, on a good note, that this is open and available to everyone. Once again, not paid advertising or not advertising at all. If you do plan on using this, make sure you do about a month's worth of research. That's not even a joke. We have seen other platforms before get hacked, fall apart, people running away with money. Not to say that that's going to happen with this one, but nobody knows what the future may hold. So I do like the idea of everyday normal people being able to accumulate more Satoshis, more Ether. If the Gemini dollar is your thing, being able to accumulate more of that. Anyway, here's the actual press release for it. It says BlockFi removes minimums and fees for its crypto interest account. And here's the thing that Coinbase did. Here we go. It says Coinbase's new customer incentive, interest payments with a crypto twist. Everyone is doing this because it's kind of the new thing. How do you get more people to go into your market? You give them free money. That's kind of the nicest way of saying it. Let's move on. Next up, the South Korean arm of cryptocurrency exchange OKEx is removing support for 5 major altcoins. I would say 4. You'll see why. Due to new international regulations. In a blog post originally published on the 10th of September, OKEx Korea confirmed it would halt trading of Monero, Dash, Zcash, Horizon, and this is why I said no. It's 3. Horizon, and the fifth coin is Super Bitcoin. Not really a major altcoin. On the 10th of October, the reason, said the exchange, is that since they are focused on privacy, the coins fall foul of new guidelines set out by the intergovernmental body, the Financial Action Task Force, or the FATF. They said, and I do quote, support for trading of 5 different cryptocurrencies. Those up there will be terminated, end quote, as Cointelegraph reported. See, I need to read slower. The sweeping changes to crypto transactions rules demand businesses to identify the 2 parties sending funds to each other if a transaction is worth more than around $1,000. Bit of a backdrop once again. The Financial Action Task Force pretty much are the people who set a number of rules for money laundering around the world, pretty much saying that if you have this amount of money and you are sending it to person B, you have to tell the government or the bank where you're sending your money and at what time. However, with coins that allow for private transactions or any cryptocurrency that's on an open blockchain, this does not have to be done and is usually not done in general. I believe, if I'm not mistaken, yep, it says more than 200 countries should theoretically implement the rules from the Financial Action Task Force by June 2020. Despite concerns that doing so is physically impossible for many decentralized blockchains. So the idea is I assume this will be I don't want to say the end, but it should be the end of the entire regulation discussion, because multiple countries have already enacted these rules, or have said that they're going to enact these rules, and it pretty much comes down to, like I mentioned, once again, these are the reasons why I personally, myself, don't have these coins in my portfolio. It's because multiple countries keep coming down hard on any type of company, any institution who holds these coins or has these coins or the actual usage of these coins. That is once again not to say that these coins may not potentially do well in the future. However, the fact that just about every major country has come forward to talk negatively about these coins, in particular Monero, Dash, Zcash. What was the other one? There's another one. Can't remember it. I stay away from them. So if you are using OKEx or know someone who does, tell them about the removing of these coins. And also, just, I mean, really, some coins are very obvious when it comes to holding them for long terms. Other coins, not so much. I stay away from them because, red flag. Every single country doesn't like them. Here's the actual press release. I don't read Korean, but here it is. Next up, the computing power dedicated to mining Bitcoin has hit yet another new high, suggesting that more than 600,000 powerful new machines may have come online in the last 3 months. According to data from crypto mining pool BTC.com, Bitcoin's 2-week average hash rate has crossed another major threshold, reaching 85 exahashes per second around 19 o'clock UTC last Friday. Meanwhile, mining difficulty also adjusted to a new record of nearly 12 trillion. Notably, both figures have jumped 60% since the 14th of June. Bitcoin's mining difficulty, a measure of how hard it is to create a block of transactions, adjusts after 2016 blocks, or roughly every 2 weeks. This is to ensure the time to produce a block remains around 10 minutes, even as the amount of hashing power deployed by machines around the globe competing to win freshly minted Bitcoin fluctuates. The idea is, this was a news article yesterday as well, and a lot of people really didn't understand as to why exactly it could have potentially been happening. The people from ASIC, Bitmain, announced a couple of weeks ago that they were planning just this. It says Bitmain to increase hash rate by 50% with 600,000. You understand how many machines that is? There are people around the world. There are old videos on YouTube of people who were mining Bitcoin, and they had around 6 machines in their house, and they were making an okay amount of money from it. 600,000 is an enormous amount, not to also mention that the people from Bitmain were already accused of trying to centralize the Bitcoin mining process simply because they at one point held anywhere from 42 to around 65% of all of the Bitcoin hash rate. The point being, we have typically, historically, seen before in the past that when Bitcoin's hash rate skyrockets, this usually is preceded. Usually after that, a Bitcoin price rise is imminent because this means that there is a renewed amount of growth in the network, in the so-and-so, or the idea that potentially in the future the price is going to go up, which even makes mining a lot more profitable than it currently is. The Bitcoin price is this, and it goes up 5 times. Well, therefore, and the mining difficulty is relatively the same, and you are making 5 times as much as you did before. 600,000 new machines is a lot. I'm not surprised. I think a lot of people, I mean, it doesn't directly, it indirectly affects us in that we may not be part of the conversations. We may not even be the people who are part of these mining operations. However, there's a lot of money always traveling behind the scenes that we may just not be aware of. And a lot of people are betting that this is the new gold rush, that this right here, what we see before us, is the new next wealth transfer, generational money movement thing, and that all of the money will eventually become digitized, and that potentially, no one knows for sure, that all the money in the world, or rather a large portion of the fiat money in the world, will transfer into cryptocurrencies and more so into Bitcoin. And this is why there's a mad rush right now. So like I said, in the past, we've seen as Bitcoin's mining difficulty, is there a chart here? Nope. As Bitcoin's mining difficulty goes up, we have seen before in the past that Bitcoin's price usually skyrockets thereafter. However, still a waiting game. And yeah, let's move on. Next up, the CEO of a cryptocurrency exchange known as Binance has dispelled fears a bad actor had attacked its newly launched Bitcoin futures platform. In a series of tweets yesterday, Changpeng Zhao initially warned that the exchange's futures were under attack from one of its own market makers. The perpetrator allegedly crashed the BTC/USD order book from $10,300 to $10,024. And what Zhao said was the second such attempt at an attack. Binance launched its futures platform in invite-only mode following a user testing period early this month. 2 platforms were originally available, with users voting for their preferred choice. As Cointelegraph previously reported, despite criticism of both operational so-and-so, blah, 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 money. In the event, the attacker turned out to be a false alarm, originating from a technical error on the market maker side. The entity remains unknown, Zhao only revealing it was also an operator of Bitcoin's futures. Due to Binance's own settings, meanwhile, the $300 dip did not liquidate other traders' positions, only the accidental attacker lost funds. He wrote, no one was liquidated, and we used the index price, not the futures price, for liquidations, our innovation. Only the attacker lost a bunch of money, which is kind of funny. And that was that, end quote. So this was news part of yesterday. I'll be honest with you, we get a lot of news about stuff like this, and usually the next day or like within an hour later, it's usually cleared up. So a long time ago, not that long ago, I used to always report on things like this just to let people know of things that were happening, but they're usually false alarms. So this is what happened yesterday on Binance, for those of you who are wondering, maybe had problems entering the website, trying to figure out exactly what was going on. On top of this, a bug during Kraken's test of an advanced order type temporarily allowed some of the exchange clients to sell Bitcoin for $12,000, and others were able to buy Bitcoin for $8,000. Kraken said yesterday, a test of an unreleased advanced order type encountered a bug which resulted in the order's prices being matched against the wrong side of the book. Some clients bought from the tester at $8,000 and others sold at $12,000 without clearing the intervening liquidity. While the candle gives the impression that the liquidity was exhausted between $8,000 to $12,000, the wicks on either side are hollow. A trade executed at the high and low, but were not trades throughout, and there were no other orders that were not matching that should have been. Sure, I'm not going to even read the rest of it. Same exact time that Binance was going through issues, Kraken also had a problem as well, where people were reporting online that they had been able to buy Bitcoin at $8,000. You may have noticed, we'll look at the prices in a couple of minutes, where Bitcoin's price had actually dipped down sometime yesterday. It was because people thought that Binance had once again been hacked, and people had also thought that Kraken was having a problem, or that something had happened with the Bitcoin price and that two of the major cryptocurrency exchanges were having issues in some sort of way, and therefore people panic, people sell, people don't really know exactly what's going on. So I like to give the news after it's happened to not instill more fear in the market, as it were, what have you, so on and so forth. We've seen stuff like this before on other cryptocurrency exchanges. It's usually a lot more extreme. For those of you who remember, a couple of months ago, there was a cryptocurrency exchange who had a flash crash, and I think people were able to buy Bitcoin for $1. What's interesting is that it happens like a flash. It happens relatively quick, and very few people have Bitcoin buy orders at $1. Just going to throw that out there. So a lot of these things do happen. They usually do not affect us. However, there are people in the market who do sometimes get afraid, are fearful, especially if you see a buy order for Bitcoin at $8,000. Usually tells people Bitcoin just dropped $2,000 in a couple of seconds. Someone knows something that's going on. Other people are selling, and therefore I should also sell. But both of these things, as of now, appear to be cleared up. To kind of finish things off, the market price of Ethereum reawakened after a long period of stagnancy. Ethereum traded at $194 within earshot of the $200 level, with volumes climbing above $6.7 billion, equivalent in 24 hours' time. The Ethereum network has the benefit of carrying Tether, the leading stablecoin. More than 1.9 billion Tether were minted on the network. This led to an increase in average transaction fees in the past 2 weeks. Ether transfer fees doubled in the past 2 weeks. For some reason, nothing has been confirmed yet. Not one thing has been confirmed. Ether is moving up in price, and a lot of people are saying, no one knows, people think that Ether could potentially be trying to make a move above $200, which would potentially, according to other analysts and other articles that I read, be an indication for the rest of the market, for the rest of the altcoin market, to start moving up as well. People think that whales, whatever you want to call them, behind Ether are trying to move the price up as an indication for other altcoins that it is time for alt season. No one knows. We spoke about alt season a couple of days ago. No one knows exactly what's happening, but Ethereum has renewed interest over the last couple of days. I think the price was around 170 something, somewhere around there. Also, for those of you who have been paying attention, we have received an enormous amount of good news for Ether the last couple of weeks, regardless of the transaction fees, regardless of Vitalik stating that the network is slowing down, or rather the network is almost completely full. We're seeing banks transferring money. You know, we had what was the news? Someone just put was it $20 million thing on Ether? People are tracking real estate and all this other stuff on Ethereum as well. So this could be the renewed interest. There may be behind the scenes news of, or rather just interest that we are supposed to have Ethereum's first upgrade, I believe, in the next couple of weeks. And then the next one will follow somewhere around wintertime. And then the final beginnings of Ethereum 2.0 and proof of stake will happen in January. Like I said, no one knows, but it is interesting that Bitcoin was not performing well, but Ether was going up the last couple of days? Hour? Anyway. There we go. As always, a very special thank you to my Patreon supporters. Yes to Crypto, Miller hits chest every day, and Kyle skips leg day, Minting Coin, Jeremy Fox, Jim Gardner, Anthony Charles, Nick Mangialavori, Paxis, Crypto and Beer Shipmate, Vlad the Impaler, Richie Rich III, Nick Kanaya, Setsuna, Damien, Nicholas, Run Earth, One Piece, One Love, Cryptopolis, Crypto Artist, Cold D3D, Strange Radio Central, Mechanic, JR, Milweezy, Adobo, Bank, Roll Network. Why? I looked at the name and I was like, what? Bankroll Network, Crypto Joe, 242 to the World, Wise Night Owl, Jared Schneider, Triple M and J, Woody and Daisy, Brady Niels, Master Ventures in Thailand, Moham Maroney, Adam Graysick, and Professor Wally from Gunbot University. Thank you all very, very much for your support. At the moment, the market makes no sense. Those of you who are not looking at the screen, Ethereum, I believe, actually touched $200. And it went down a tiny bit. It's not a $20 drop. It's a $3.01 drop. I assume we're going to try by the end of this day, especially we were just in the article that said Ethereum's trading volume was what, 6 billion? 6.7 billion. It is currently at 7.9 billion. That is a huge amount of volume for any altcoin. I think even at the peak of Bitcoin hitting 20,000, I believe its trading volume was around 7 billion. So Ether is already above that. We could be trying to make a move. Who knows what's going to happen? Some of the altcoins are clearly trying to follow, but I think everyone's just as confused as everybody else at this point. We should still see, hopefully, by the end of this week, if not the weekend, if Bitcoin's price is going to break out of the range that we've been having. And like I said, here's the actual drop in price from Bitcoin. Because of the news of the rumors from Binance and Kraken of Bitcoin having a price problem on their platforms. What else is there? Not much else at the moment. I hope you all enjoyed. Hope that you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching and or listening. And I will most certainly be talking to you all soon. See you.